All right, let's dive into the Indian market for February 18th, and what a day it was. A real story of extremes. We saw some incredible record highs, but at the same time, some major nervous selling. So let's kick things off with the one number that really sets the scene. And there you have it, plus 0.37%. So a pretty solid day in the green for the Nifty 50. Now, I know what you're thinking. That doesn't look like a huge number, right? But trust me, the story behind this number, that's where things get really interesting. See, this wasn't just some random pop. This was actually the market's third straight day of gains. The Nifty 50 wrapped things up at 25,819, and the Sensex wasn't far behind, closing over 83,700. You know, a three-day winning streak like this, it tells you something's brewing. There's real confidence building up. So the big question is, what's actually fueling this fire? Okay, so to really get what's going on, we gotta look under the hood at the technical signals. What are the charts actually telling us about the market's mood right now? Let's decode these bullish signs and see why the bulls seem to be running the show. So, right here, we've got three huge green flags. First, the Nifty smashed through a key resistance trend line. Think of that like breaking down a wall that was holding it back. Super bullish. Second, we've got a confirmed bullish MACD crossover. That's basically a big flashing green light from the technicals saying, hey, the upward momentum is real. And third, the RSI, that's the relative strength index, is sitting pretty at just under 54. That's kind of the sweet spot. It tells us there's plenty of buying power, but things aren't getting dangerously overheated. Now, all of that points to strength, for sure. But there's another piece of the puzzle that really seals the deal on the market's mood, and that's the India VIX, or as everyone likes to call it, the fear gauge. Basically, this thing measures how much turbulence the market is expecting. So when the VIX drops, it's a clear sign that fear is leaving the room, and investors are getting a lot more comfortable taking on risk. And look at this. Today, that fear gauge plunged more than 3.5%, all the way down to 12.22. That is a big drop. It's telling us this rally isn't built on sand. There's a genuine drop in anxiety backing it up. The bulls are feeling very confident. But, and this is a big but, that confidence was definitely not shared across the entire market. Yeah, because when you look just below that positive headline number, you see a massive tug-of-war playing out. Today was really a tale of two completely different markets, all happening under one roof. In one corner, you had the heavy hitters. Metals, PSU banks, FMCG, they were all on fire, just surging ahead. And in the other corner, taking all the punches, the IT sector. This divide, this is where the real drama of the day was. So let's talk about the absolute star of the show. Check out this number, 9,647. What is that? That is the brand new, all-time, record-breaking high for the Nifty PSU Bank Index. I mean, these public sector banks were just on an absolute tear today, carrying a big part of the market with them. Okay, now brace yourself because we're about to do a complete 180. While the banks were popping champagne at new highs, the Nifty IT index got hammered, dropping 1.37%. They were the day's biggest losers, by far. So what on earth is going on? How can you have such a massive split? Well, the answer in two letters. AI. Artificial intelligence. There's this growing fear in the market that these new, incredibly powerful AI tools, we're talking about things like Anthropic's Sonnet 4.6, could completely upend the business models for our big IT companies. I mean, a lot of their work is providing services that these new AIs might just be able to do themselves. And that potential for disruption, it's making investors really, really nervous. Okay, so we have this massive clash, right? Banks are soaring and tech is getting slammed. With that backdrop, let's zoom in on 5 specific stocks that were right in the middle of the action today and could be the ones to watch tomorrow. All right, let's break these down. First up, InfoEdge. The bias here is definitely bearish. We're seeing fresh short positions being built, which means traders are betting it'll go down. And it actually hit a 52-week low today. Not a good sign. Next, ICICI Pru Life. This one's interesting. We're calling it volatile. The stock's been weak, but suddenly there was this huge surge in trader activity. It feels like someone is placing a big bet that things are about to change direction. Now for the bullish side. We've got Tata Steel just riding that massive metals rally with incredible momentum and high volume. And of course, Punjab National Bank, one of the heroes of that record-breaking PSU Bank rally we just talked about. Strong all around. And finally, let's talk about the big one, Reliance Industries. We have to be cautious here. It's trading below some key technical levels, and there's a ton of activity in put options. Remember, puts are bets that the price will fall. All that action tells you conviction is pretty low right now. And really, that brings us right back to the central theme of the day. It's this epic showdown. In one corner, you've got the unstoppable force of the banking rally, hitting all-time highs. And in the other, you have the immovable object of the IT sector, getting crushed under the weight of AI disruption fears. So the question we're all left with heading into the next session is, which one of these powerful forces is going to win out?